Time now for business news. We head over to 680 News and senior business editor Mike Eppel. Good morning, Mike.
Morning, Tammy. How are you doing this morning?
I'm good. And so the Bank of Canada, will they or won't they when it comes to interest rates?
Bank of Canada decides on interest rate policy at 10 this morning, Tammy, and they're not going to lower the benchmark interest rate from the current 0.5%, even though they would probably like to, because what have you been hearing about the Canadian economy most recently? Slowing signals. The second quarter is expected to be a negative performance from the Fort McMurray fires. We've had the fallout of Brexit, the trade statistics, which have been crummy with the U.S. recently, and Bank of Canada Governor Stephen Poloz is today likely going to lower the economic growth expectations for the second half of the year, but not the overnight lending rate. Main reason? They don't want to overheat an already overheated housing market in Toronto and Vancouver with even lower interest rates and mortgage rates by extension. So we'll track that. Could have some implications for the Canadian dollar, and the outlook, again, not expected to be all that great from our central bank coming up today. Now, we have some commentary on the housing market this morning in from Royal LePage, which is predicting the second half of this year will see housing prices on average up 12.5% on a year-over-year comparison. Royal LePage saying the boom time continues in Toronto and Vancouver. Those are certainly the two hottest markets, but they're even saying Brexit, the British vote to eventually leave the European Union, that could impact our housing market here at home because it'll keep interest rates globally lower for longer. And a lot of the uptrend in real estate has been about the record lows for mortgage rates. We have some interest or some real estate news of a different nature from Niagara Falls, which of course has all of those Canadian hotels on this side of the falls and in the United States, in New York State. Not as much competition, but there could be some more coming very soon. They broke ground yesterday on the Hyatt Hotel in Niagara Falls, New York. This is going to be the biggest project that city has seen in about 40 years in its hotel business. So potentially, again, some cross-border competition for Niagara Falls. It's a 128-room property which should open in the fall of 2017. Wall Street coming off records. Yesterday, both the Dow and the S&P 500 hit all-time record highs. Now, we look at it on an historical basis. The Dow and the S&P 500 year to date up by just 5.25%, sort of mediocre. The Toronto stock market, by comparison, now up by 11% for 2016. It has been a nice rate of return for investors on the Canadian market, fueled by energy stocks, metal and mining companies. Some of the gold stocks have had a pretty good year. The big banks have always seemingly put in a fairly solid performance on a year-over-year basis. We'll see if that uptrend continues this morning. We have the price for oil opening a little bit lower. Saw a 5% pop for oil yesterday. Today it's back down as U.S. inventories rose just a little bit over the past week. And the Canadian dollar, which may or may not be affected by what the Bank of Canada has to say today, opens at around 76.75 cents.